Hello, dear traders. This is Alex Gerchik. Today, honestly, I would say it's probably my favorite topics. It's a false breakout, how to trade them, what are they, and how to understand. Just for you to understand, a big players in the market, it does not really matter what you trade, what kind of instrument this is, a Forex market or a stock market or futures. When a big player needs to take the position, they use false breakout to take the position. I'm going to start probably show you many pictures for you to understand in order not to say just in words. I mean, false breakout, it's an instrument for the big buyer or a big seller to accumulate the position against the trader. So what usually we need, for one simple reason, I'm going to start showing you my screen. Okay, figure out this. This is the level. Very important thing, it's a level because for one simple reason, the level always break the chart into two parts. There's a traders here and traders there. Everybody who's up there until we didn't break a down line, everybody's making money here, they're happy. And here is a short side. If basically the instrument anywhere below the level, everybody feels happy as far as the short sell. So basically, you know, one thing for a fact, for example, this is a limit seller. You know, how the big buyer and how the big seller in this case can take your position. Obviously, you know, if you sit in short, you feel very comfortable because, you know, that's what it is. You know, right here, you're sitting in a short position. This is, let's say, ground zero. You're right there. Everything is fine. You have a stop order right there, and you feel comfortable. You don't have to worry about, you know, somebody's going to take your position because, you know, right here, you're safe. So what's going to be not on the safe side? Only if the basically price for the instrument is going to go here to this side, you don't feel comfortable there, you're going to basically get a stop or giving up your position. So what the big buyer or big seller usually do? Right here at the level that take the order away, somebody is still buying it. All the stops are getting together. He takes your position, bring it down, and then the instrument goes down. So what we just had it, we just had the false breakout. False breakout, there is a few different types of false breakout. The false breakout with the one bar. So what does it mean? When the price go up, and you know one thing for a fact, and you probably seen many times, the price closing right here, accumulating all the buyers and attracting all the short positions. So basically, this is a short false breakout with a one bar. When the price closes right below the level, you can basically enter here and you're going to be very happy. So this is a false breakout with the one bar. There's a false breakout of two bars. That's how it works. I'll explain it for you right now. False breakout with the two bars. First bar, covering all the stops, closing all the stops, closing the position above the level and saying, guys, take a look. I am a long buyer, I'm buying it, and you are buying it with me. So everybody is happy, the stop orders are triggered, the positions are triggered, everything is fine. Then another position opening much higher, right there at the upside of the level, right above the level. So you see one thing for a fact, he say, okay, we're buying it, you buy with us. Everybody's buying it, and then he takes down. So this is a false breakout with the two bars. And the third one is the false breakout of the multiple bars. But the very important thing, very important rules, the price has to stay above the level. So you know one thing for a fact, all of these guys against this level is they're going to loosen once the level is going to be here. So we call this as a false breakout with the multiple bars. So right now I'm going to start showing you the pictures. I have it right here. Hold on one second. Okay, this is the level of fakes. I usually make this picture so you see one thing for a fact. Okay, very important thing when you getting ready for false breakout, it's to understand one thing. What is the level? If you basically put the level incorrectly, you're never going to get the good price. In this picture, we don't have a false breakout yet, but usually what would we call false breakout? If the price went there and then went above there. The beautiful part about false breakout, you can always get a perfect price. And you know one thing for a fact, if there is a big move against the level, you know, first of all, a direction. So obviously, if the price is going to go get there, you know that these people who was losing it here, who was selling it there, they're going to cover. So we're going to right now try to find something perfect. You see, that's a perfect example. First thing, we identify the level. Okay, so we see the level. This one, this, a lot of touches, and we know one thing for a fact. It breaks the level, so once it come back, we know one thing for a fact, what to expect with it. It's called impulse. So basically, we know one thing for a fact, that all of the people who were selling here, you see from 28 to $26 a share, they all put in the stops above the level. Because of the stops and because of the people who is trying to buy here, that's what brings the stock price higher. So what do you have here? You have a level, and the level split the chart into two equal parts. This is the sellers and this is the buyers. Sellers are capitulating in this side, buyers are capitulating in this side. So when you trade the false breakout, you trading a capitulation of one or two different players. So you know one thing for a fact, everybody who was selling here, like I show you in a pain chart, everybody is going to cover their position right here. We're going to try to go with the different examples. This is a beautiful part. This is a Forex market. This is a Japanese yen and a hourly chart, and this is the daily chart. So you see right here, this is called a mirror level. You see when a support level becomes the resistance level. And you know one thing for a fact, the price for the, you see the price for the yen is basically going up and down, up and down. And then what I show to you, take a look right here. This is a false breakout with the two bars. Where the first bar closing above the level, it shows that somebody is trying to buy it. Then it's opening higher again. It shows, guys, take a look, I'm buying it with you. And then it breaks down. So you know one thing for a fact. Anybody who was selling here, they cover right there. When basically yen is open right above the level, you know one thing for a fact, who is buying? The buyers are there buying it because they think the instrument is going to go higher, you know, because it's open right above the level. So then it's going lower for one simple reason, because these people who was buying it there, they're capitulating. And once basically the price go here, the short sellers also becomes very active. This is a beautiful false breakout, Take a look. This is a very good breakout on hourly chart. You see a very strong level, 212. Take a look. The prices couldn't break it, and then a very big false breakout, very big and very deep. So you know one thing for a fact. The beautiful part is you have level, you have fake, and you know where to enter the position. You enter the position getting the first impulse. So you know one thing for a fact. When the price is not allowing to go higher or lower, you know what to look for the price. We're going to see a lot in this picture, so you will understand. This is another beautiful false. Take a look. You see? This is a very strong level. The price tried to go higher, then it's going lower, then it's going higher. Take a look again. Big false break. You see? It went right above. It took all the stops from the above, all the stops, and it went down. So you know one thing for a fact. Everybody put the stops right above these bars, because everybody is looking for the same. They look for the price to go above the level. Once the price goes above the level, everybody is getting ready basically to buy because they're afraid. So since this instrument, it's located right at the high side of the level, so this is the extremum, everybody's going to put the stops at the same price, especially short sellers, because they don't know what to do. Buyers as well. Buyers want to get in, because if they're not going to get in right here, then their stop is going to be huge and they're not going to get entered. So what he did, a big seller, he basically took the stock higher, took all the stops, and then took the position lower. This is a beautiful false. I love false like this, very small with a very short. Take a look. This is a very important level. This is the low side of the gap. Low sides of the gap are usually extremely good levels. So in this case scenario, you see low side of the gaps, and take a look. This is a false breakout. You see, it broke the low, touched basically broke the line, closed right above, and then went higher. This is a beautiful move, just for you to understand. We're talking about almost 25% in the move. This is almost 25%. So you know a few things for a fact. That everybody basically who was buying here, they put the stops at the same price. So basically, when they get knocked down, you see they basically sell the position. Somebody is definitely trying to buy. And once the position get in, then somebody is trying to sell here as far as the shorts. So somebody is trying to basically cover their shorts, and they initiated the move. So when you look at the false breakout, you have to know one thing for a fact. First of all, where's the level? Against what positions? The position is built, the direction, and who's going to cover or who's going to buy. Another one, beautiful falls. Take a look, very beautiful falls. Very strong level, limit level. You see at 75.20. Very small fake. Take a look, very small fake. You see he went right above, took all the stops, and brought the stock lower. So you know one thing for a fact, exactly what I show you, you see exactly for a fact how it works. You know one thing for a fact, that this price and this move down comes from here, because everybody buys here, because the instrument closed higher, then it basically brought the high. You see, it broke the high. I'll make it a little bit bigger so you'll understand. You see, it broke right the high. It took all the stops, took all the position, took the short position out, and took long position out. So once anybody who was buying it here, they put in the stops right here. That's how they generate the move. So you should understand one thing. Like they say in the United States, there's a shakeout before breakout. The big buyer or a big seller, when they need the position, they would use a fake false breakout, so fakes. Otherwise, you're never going to give them position. Just to imagine. Figure out this. You have a very strong level. In this case scenario, nobody basically would give you the position because everybody is comfortable. They have shorts. They sold their stock. They're not planning to go anywhere. They feel very comfortable. They don't know exactly what to do because they are doing all right. But they're all going to put the stops right here for one simple reason. If the stop is going to be right there, they're all going to get out. So you see, nobody's going to give you a position. So what if you are a big player? What you have to do in order to take the position? You have to take the position away. So obviously, if they don't give you the position, you take the position away. That's how you take it. You take in a sell order out, and somebody who is trying to buy, they pushing the stock higher, and you take the position. Very nice and simple, and a beautiful example. Take a look at this. Beautiful example. Beautiful example. Very beautiful example. Very strong level. False breakout with the 2 bars. As I said before, if you remember, one of them closed below and saying, guys, take a look. I broke the level. That's it. We're going lower. We're getting killed. We're getting destroyed. Everything is fine. Another one, take a look. Open lower there as well. Said, guys, let's short together. We're together going to make money. So everybody who's shorting here, they put in the stop right above. Once basically the stop is generated, that's how you get in the move. You get in the move because all of these people are going to cover. So that's how the big player works. Again, beautiful. You see, false breakout with the 2 bars. The instrument just went down from $25.50 a share to $20 a share, 25% down move. So you know one thing for a fact, you know if the move from to the upside is going to be continue, you know it's going to get from all of these guys who was losing it. So basically, you know one thing for a fact, you have to be ready. The beautiful part about false breakout that you know exactly when to enter. You enter right there because you are getting the first impulse. That's where you're getting in. Right above. Once they basically taking a position right above, it's going higher. Look at this. Beautiful fake. You see, just a little bit. Usually, a lot of times, you're not going to be able to catch this kind of fast fakes. This is a very fast fake. Take a look. But this is very small and very nice fake. I love fakes like this. When a big seller would not even give anybody an opportunity. That's why usually the moves are very sudden. It's a sudden move. It goes very fast, and you are not going to be able to have a chance to get it. But in this case scenario, when it goes up without stops, you have to be ready for the situation like this. Very nice fall. Take a look. This bar just 0.75 points higher than the previous high. Just 75 cents. You see, I put it right here. This is a very good fake, and most of the time, these fakes are going well. It does not really matter what kind of instrument you're going to trade. You know, you're going to trade S&P, you're going to trade NASDAQ, you're going to trade Forex, you're going to trade anything else. That's how it's going to go. You see, another fake. Take a look. Very small fake. But look at this beautiful fake. Take a look. See, it just went higher just by 15 cents. And look at this move. Usually this moves are very well. I'll show you a few very good examples that I like. Very good fake. Take a look. Excellent level. British pound against the Japanese yen. You see, looks like everything is fine. You see, goes up, breaks the level, and goes straight down. Very easy to identify. And the last picture that I want to show to you as well. Take a look. All of this fake. Very nice level, huge bar, and a bar against the level. Take a look. Excellent. You can really get into the position. So in order to finalize, as I said, our short webinar, I don't like big webinars. I don't like these hourly webinars. You should understand one thing. The very important thing first is to draw the right level. Once you draw the right level, you have to understand the move to that level, by whom it makes. If there is a move by buyer, pretty much the false breakout, this is a counter trend trading. So you basically trade the energy of those guys who was buying it in the way up or selling it in the way down. You know one thing for a fact, that in the market, in order to move the instrument, you have to have energy. If you don't have energy, you're never going to get a position. So false breakout has been used by big guys how to make how to take the big position. It's been Alexander Gerchik. Thank you very much. Short but nice webinar. Take a look at the pictures. There's a lot of pictures. And trade with us, trade with our company, and make money. Thank you very much, and have a nice day.